We're now joined by Laurence Reed, who's CEO at Europa Metals, which is a European lead, zinc, and silver exploration company.
Zach, thanks for that introduction to Europa Metals. Said I'm Laurence Reed, CEO. Zach, I think we're going to do something a bit different today, which is we put a lot of data and numbers out from Europa Metals. We're in the middle of feasibility study of our Terrar lead, zinc, and silver project, and we have numerous papers, different levels of presentations. At the moment, have got a high level of technicality, but I think what we'll do today is actually just take a step back, which is why we're on the boring cautionary disclaimer slide, and ask the question why, which I think is always a good question to ask, whether investing or indeed being on the board of a company or overseeing operations. And it's a question Miles and I ask a lot to each other, Miles being our executive chairman. What are we doing? Why are we progressing the Terrar lead, zinc, and silver project, and why are we putting it through PFS? And also, what are we going to be doing next? And coming back to why is 2021 important in terms of metals and the project itself, following frankly pretty abysmal previous 12 years in the mining and metals space. So rather than just throw lots of data and numbers at you, I thought we'd try this slightly more experimental approach of what I've been thinking about, what in summary we've been discussing a lot recently within the company itself, and also with a number of third-party groups. So going right back to the beginning, we have one project currently, that's the Terrar Project. It's located in Spain. But right from the beginning, we loved the fact that we owned 100% of it. And that's very important. And owning 100% of a project in a developed world location gives us a lot of security in terms of license, gives us a lot of security that we know that we can put money into the ground and in a sense be masters of our own destiny for the first couple of years. So we've been doing this for about 3 years, and deliver on the promises also that we've made to the licensing authorities. And this was borne out by the fact that following our first stint of development or exploration, looking at a lot of historic work that had gone on, we've had our investigation permit renewed for a further 3 years in Q4 of last year, until 2023. But again, for a small company, having that total security, having 100% ownership, it is a great thing, and it's one of the reasons why we wanted to run with this project and progress it forward. And again, let's just come back to that point about the first couple of years, and in a sense we inherited, we think about 11 million euros of work. So when we took the Terrar project on, we could see there was historic drilling of about 40,000 meters across the project itself. And somebody actually asked us the other day, how much would that cost in current terms if you would have had to have done all that work yourself? And our internal estimate is it's about 11 million euros of work. And by taking that drilling core and in a sense partially ignoring the extrapolations from it, but going back to first principles, being able to relog core at Spain's fantastic National Litoteca resource in Andalusia, where our core is stored from historic drilling operations. In just 3 years, with a very limited amount of money, we've managed to move now into pre-feasibility study for the Terrar project, having done 2, I would argue, quite advanced scoping studies, looking at profitable production from the project itself. So again, as a junior, why are we doing this? Well, we can piggyback off a lot of previous work You know, this is has always been for us very, very far from, if you like, normal exploration. It's really began as late stage exploration, and again now we're in advanced economic study mode. This is quite an interesting figure. This is down to Terrar Project. So thanks Barry and the team. So that the second economic study we did, which was announced in Q4 of last year by Barra Consulting, is a very detailed and very conservative, rightly so. And that's absolutely what we wanted. And it used 3-year trailing metals prices for lead, zinc, and silver, which gave us over a 12-year life of mine about $963 million of revenues. But again, TPI had a look at it and said, well, guys, you know, what happens if you actually apply, you know, April spot numbers to it, April of this year, and you get that over $1 billion revenue mark, with the $53 million US uptick. And I think that's really interesting because yes, we're rightly conservative when we do our studies, and we'll come to that in a moment. But it shows that there's a real rising metals market. And again, the other day, I think it was Ryan Long, the Terrar Project analyst, said, you know what, it's great, guys. He says something like, the problem with you guys is you're in the shadow of copper. So I think, you know, there is a certain amount in truth of that with renewables and green and electrification infrastructure. Obviously, copper is having a huge moment. Having been involved in copper for many years, it's fantastic to see. And yes, lead zinc, I think, certainly is to some degree in the shadow of copper, which is very much one of the sexy stories at the moment. But equally, we don't need to be the most exciting kid on the block. And looking at zinc's demand cycles and new uses for zinc, and frankly, it's a bandwagon, but we're there on it. Battery technology for zinc itself, you know, we're in a demand cycle where supply needs to meet that demand, but also it's the type of supply, and we'll talk about this a bit later. But again, I have a feeling that the metal concentrate's not just going to be concentrate, not just in terms of its component parts, but where does metal come from? How is it sourced? What are its renewable inputs? So there's quite a lot of exciting things happening in the market. I mean, I would say the metals market, the mining market's really significantly changing for the first time. Because as I've said already, after a pretty stagnant 12 or 13 years. And again, it's this look at transparency across the entire metals supply chain. But we're probably getting ahead of ourselves. If Terrar Project are completely wrong, and most of the world economists are wrong, and lead, zinc, silver crashes, we think we'll still make a profit because we have approximately a 50% margin. And you can see the 471 million EBITDA figure over the 12-year life of mine. Development projects, mines need to be robust. And again, that's why we are also doing Terrar. You know, it was one of the really interesting things following the first scoping study we did a couple of years ago, and then only just increased significantly to the Q4 scoping study. This is a highly robust project with a low capex entry point of around $79 million. We have at present, projects need to be able to weather storms. I think we all saw a number of projects during the boom times which were marginal or profitable slightly at best on rampant metals markets, but then of course destroyed themselves shortly after. And again, I think long-term investors, they want to see this robustness, they want to see conservatism, they want to see that this project can flex in adverse metals markets, but equally, if metals prices increase or continue to increase, we will obviously do extremely well out of it. But it needs to be able to work both ways, depending on the market environment. And again, a lot of this is the product of grade. And again, the Terrar Project has a fantastic high grade lower center, which is great. And one of the really interesting things when we've been talking to groups over the last 6 months is you can see in our long form presentation is that the highest zinc grade of the project is in year 12. And what that's telling us, and that's what's telling other groups, is that with a project that's clearly open to the east and open at depth, it's likely that Terrar is a much bigger project than just 12 years. And while we've concentrated quite rightly at just the initial 12 years, because we're a small cap exploration development company with not very much money, what we've done is we've proved up a highly viable model, which can clearly be extrapolated out to a longer life of mine, and maintain or possibly increase that robust level of margins. But again, the high grade core of Terrar we've always talked about, the lower part of Terrar we've always talked about. But really, I think the work over the last 2 years has been really exciting in terms of looking at that early production and being able to bring back and draw back that early production within the 12-year cycle, being able to enhance that payback period as well has been highly exciting. And that's what interests us, is, and as Wardell Armstrong progressed the PFS and start looking at the approach into the high grade lower regions, it's going to be really exciting to see what happens with those upper regions if we're able to bring more tons into the production profile, and the grade's strong. And again, moving directly onto that, this is where we are today. So we've got about 3,000 meters of PFS drilling so far, and the campaign has exceeded expectations. And again, take a moment to take my hat off to the team. So the Spanish operating team, led by Luis Perez, has done a brilliant job during very challenging times during coronavirus. But we have a team who are all living in Castilla and Leon. It's a well-established team, used to working with each other. Safety has been a priority all the way through this process, but they've managed to conduct numerous work streams for the PFS and around the PFS, including helping us run virtual site visits with third-party groups, supporting our corporate efforts. But the results that we've seen in the intersections we've seen from the campaign this year have exceeded what we thought we were going to get. Again, this comes back to focusing on the early years of production. So we've been drilling within the upper zones, and the grades returned from some of that drilling have just been great. And because we're a small company, we do what Miles and Luis always do, which is we take advantage of as much data as possible if we get a good intersection. So you would have seen that we've drilled daughter holes for metallurgical test work off one of those great intersections this year. So we'll have samples for metallurgical work for PFS, as well as geotechnical samples from the main hole, as well as being able to take the core and use it to develop and generate new resource upgrades, JORC 2012 standards. So again, taking advantage, making every buck count during this PFS, as we always do. But again, we're really excited about looking at what happens to the economics of this project when we build in the new resource, when we start building in those intersections that we've discovered this year, and how that looks in terms of the first couple of years of the Terrar mining schedule, which WAI, Waterloo Armstrong International, who we appointed, I think, just a couple of weeks ago to be our study managers, will adjudicate on. But in addition to diamond drilling, we'll also be updating the market on our water program. So borehole drilling. The borehole will assess water conditions, hydro conditions, subsurface within our potential mining area. In addition to that, we've also got our piezometer campaign that's been going on for some time now, which monitors the water levels in the local area and the pre-existing conditions, because we want to be absolutely best practice and have all the correct monitoring work completed to move forward into a mining license application scenario. Algorithm is a great buzzword. Everyone has to have an algorithm. We sort of do have an algorithm, but I must admit it's not a sexy, exciting blockchain type algorithm. But we think it's a bit better than that because it's immediate cash. Now, we got into partnership. We have partnerships and relationships with a whole series of higher education groups within Spain. We think it's very important to have those relationships to embed us and to work with communities locally and federally. One of those relationships is with the University of Salamanca, university which is located within Castilla and Leon. It's one of the preeminent universities for mining within Spain, one of the oldest universities. We actually developed an innovation partnership with them and also SPI Drilling to essentially create an algorithm and analyze data coming from the current PFS drilling campaign to look at a potential piece of software which could basically correct drilling as it continues and with an eye to commercialization. We drew down the first part of that grant, which was via a soft loan effectively, which has been great. We're now coming to the end of phase one, so we look forward to updating the market as we submit all the data from this first phase of the IP partnership, and look to go into the second phase and pull the next tranche of funding down. But as well as money, which is great, it shows how partnerships can be beneficial, how we look at approaching this project and developing this company. Is we look for innovative ways to secure funding, to progress the project, to work in partnerships with key stakeholder groups. And it's a really interesting time at the moment, which we'll come to in a moment, in terms of operating within the EU bloc, with major funding sources coming down, very innovative ideas to support the integrated metal supply chain and industry within Europe. So those are some of the things we're actively looking at the moment. Tax and regulation, these are mining's new best friends. When I began my career, frankly, one of the ideas was that with a lot of countries opening up previously from oppressive regimes of various types, desperately wanting cross-border investment, there was a feeling you could go in, get fantastic tax breaks, work with light touch regulation with a government that really wanted you to get on with things. But the problem is it wasn't sustainable, has been proved time and time again. And by not sustainable, I don't mean sustainable as the buzzword of environmental impact, etc. It wasn't sustainable because 5 years on, when you're producing a lot of metal and producing a lot of money, people want to see you contributing to the tax base. Being in a developed world country, being in a fantastic region for mining, Castilla and Leon, which has made quite a lot of changes to its mining regulation to benefit some metals companies like ourselves, and focused on lead, zinc, silver in the last 6 months. It's great because there's a clear framework, of regulation we can operate in as we move our project forward towards production. And also we've been doing a lot of work on taxation, just looking at the scoping study numbers and having independent numbers extrapolated from that in terms of not just our direct tax impact, but also our impact on secondary and tertiary services and jobs, as we talk to a number of really important stakeholders within the region, within Spain itself and within the EU, to say we're going to be an appropriate, and that's a really important word, an appropriate mine within Castilla and Leon, which is going to have a very near-term impact onto the tax base. It's going to be a long-term contribution to the tax base and services. And also we're able to say to potential customers or partners, look, you have full look through as to how we've done everything from our water, all our environmentals, that we have best practice, human rights frameworks in place for people to work under. And we've got the backing of one of the world's major trading blocs, the EU. And on that, this is an interesting slide. Infrastructure, of course, is absolutely key. I think that the days of, can I have $1 billion to build my iron mine and a $2.5 billion to build the railway and the power have probably waned somewhat. Being in a developed world country, we have fantastic infrastructure around us, road, rail, power. But again, coming back to this ESG element of what does your concentrate look like? Where does it come from? What are its credentials? Report from the National Grid of Spain last year for 2020 demonstrated that yet again Castilla and Leon has the highest grid renewable contribution at 95.1%. And again, that's something that's really interesting to us as we move through PFS, is being able to secure that information in as we work towards looking at grid power options, to again talk to third parties and say, well, if you take concentrate from us, it's going to have this power renewable low carbon footprint, which is very important to integrated groups now, as major financial groups looking very carefully across the integrated supply chain about the characteristics of every bit of metal coming out from the smelter or the yard. 3 quarries. We're frankly, we've been talking a lot within the team ourselves about Cornwall recently, because looking at what Cornwall's doing with rejuvenating their mining industry, pre-Brexit EU investments, government JVs, it's great. And I kind of think of our immediate region as a Cornwall in some senses, a very long history of mining. When we go and sit with the DG of Castilla and Leon, we're talking to people who really know about mining, who understand the realities of mining, are searching questions because they know the right questions to ask, and we've got that clear framework in place. But also when we talk to local mayors, this is a region that is surrounded by industry, quarrying, etc. So we've got a fairly high level of education and knowledge and frankly support behind what we're doing at this moment. And again, there are opportunities in the area with disused quarries, which have just been left open as huge scars on landscape, of looking at rehabilitation opportunities with our dry stack waste, looking at filling those quarries and actually contributing in a positive way to the local environment by rehabilitating those areas. Again, this is all subject to technical detail, but again, it's a region that gets mining, that has mining, and we are looking to adapt ourselves into that context and look at ways in which we can react to what people want, which benefits us as well as the local communities. And again, EU, located within the EU. The Next Generation Fund was launched recently, which is a huge investment fund across Europe to create the next generation of jobs. And well, I won't lie, it would be fantastic if we could secure some money from that. It has an interesting, again, context where we're operating in, is this trading block, the support of this trading block, supporting the private sector, having a huge commitment of capital into all manner of industry, whether it be car manufacturing or smelting, consumer goods, agriculture. That's all good for us, and being located there as hopefully a trusted, integrated new supply source of lead, zinc, silver is really important. And that's the difference, I think, in 2021 that I've seen in comparison for the last couple of years, is that the push behind integrated supply, the entire supply chain, the fiscal differences and regimes between bad environmental metal production and good metal production is really telling now. So that's where we are, looking to develop a best practice operation, lead, zinc, silver mine in the EU. We developed, very well progressed in PFS. More news to come, we think, shortly. But also timing. We think, we've been working away at this for 3 years, but I think the timing right now is really interesting in terms of what's going on in terms of metals production across the world, and the change in the market. So finish off, that's our share price. It's 12 months since our consolidation. We did major consolidation. It's up since then, but it's not where we want it to be. And as the board of shareholders, we are very actively engaged about moving that share price significantly forward. And we're working obviously on the project, but also corporately to do that. But again, I think we might have timing behind us. And the one thing, the old adage about the one thing you can't change is the geology. And we think we've got a great asset, a robust asset, and all the things that we're doing right now, all the data that we're seeing just goes on to confirm that again and again. So work to be done on the share price, but I think it's going to be an exciting 6 to 12 months ahead of us. So Zach, that's the end of my slightly experimental presentation.
Right, I've got plenty of questions to fire at you. Hopefully you'll be able to answer some or all of them successfully.
Come on, bring it on.
First one, there seems to be a disconnect between where you've taken the Terrar resource and the market value of the company. Why do you think that is?
I don't think we get an awful lot of value from our operational work. I think our shareholders, who are in the majority private investors, which is absolutely fine. We have one institutional shareholder who's very happy, I believe, with our work. But we don't get the look through to say, okay, we've delivered that intersectional, you've done that metallurgy, so that means you're going to be more attractive for development, a transaction, a JV, whatever it might be. I think a lot of our shareholders just want to see the transaction, the JV, the development, cash, production, whatever it might be. So we're lacking the look through. Not having more institutional shareholders on, just because I think the nature of the market, so with a market cap that we have today, I do think there's a fear from institutional shareholders about getting into smaller cap stocks. I mean, previously we talked about lobster pots and getting into things you can't get out of due to low liquidity, but that's fine. So that's why we've taken a lot of our good institutional work, and basically we're using that with entities to help us develop this project, realize value from it. It's why we have Conrad partners on working with us, who are a specialist offtake group, who've been very successful working with developing and producing products in the past. It's why we have Adam Habib working with us at a senior transaction level, because we want to, if all of that good operational work's not finding value in the market, there's no point moaning about it, Zach. We're going to take a lot of that work and we're going to put it into our corporate efforts, and we'll look to realize value that way.
Okay, rather nosy question. We last had drilling results a month ago. So when do you think the next set will be announced?
Okay, well, if you follow us on Twitter, you would have seen that I tweeted a great big wrapped cocoon on a pallet full of assays this week, which are going off to the labs. So drilling ongoing, those assays need to be looked at. Very pleased with the drilling campaign. We've done an awful lot of work. I think I just referenced it a moment ago in the presentation. So it's all happening. I'm not putting timeframes on things for two reasons, not just because I'm a coward, but because number one, coronavirus makes things quite difficult to really plan in the normal course of events. And second of all, we took a decision, a health and safety decision at the beginning of the year, that we weren't going to put timeframe pressures on our own workforce in order to avoid the type of incidences where people are rushing and contract COVID or have something drop on them. But I think we've demonstrated we've done an awful lot of work since the beginning of the year in difficult circumstances. So we'll see what happens with that pallet. But yeah, we'll have news out.
Okay, you mentioned copper results in June. So is there a chance of a future copper exploration program at Terrar?
Well, I think if we go back to that announcement, we wanted to mention the copper. It's always been interesting that we're finding copper. Bluntly, I'll choose my words carefully. There's not enough copper where we are above the 1,000-meter mark at the moment. So we've got that high-grade sweet spot in the middle, and we've been working a lot in the upper zones to go down. But we are seeing copper. There are mines which are similar to Terrar around the world, which have started mining copper, let's say below the 1,000-meter mark, more in the year 15 to year 20. So yeah, I would hope there is a copper, or indeed it would have been an exploration campaign past the year 12. But that's probably something that comes much later. We're a small company. We don't have the money to be sticking in drill holes at 1,100 meters. But similarly, we've got a very comprehensive data room, and people who look at that data room can see that there's copper shows, can equate what we're seeing at higher levels with their own experience. And right now, that's enough for us.
Okay, what are the stages we need to go through to deliver the PFS that Wardell Armstrong has been hired for?
Okay, so we'll be doing more resource work. That's probably the easy one to start out, looking at more indicated. We'll be taking more geotechnical data from the mining area, but also looking at waste areas as well. So that will need to be done. And obviously we're taking geotechnical data from the drilling campaign that we've conducted so far. You would have seen we had a fantastic hole earlier in the year, which we then drilled daughter holes off. So as we have done before, Louise and Miles says we've got a great intersection. Let's make most of it and retrieve metallurgical sample, because we want to do more metallurgical sample work, especially within the upper zones, not just the lower zones. But we want to look at the characteristics in the different areas of the mine, because we want to sweat those economics, and also look about how that early year mine design works and see if we can get better payback conditions. We've already improved it significantly once, and work around getting more tons into the production profile before you hit that sweet spot in the lower areas. Hydro, water, extremely important. So again, sorry to communicate via Twitter, Zach, but you'll see we talk a lot about water, and probably some very boring pictures of people standing in rivers with sticks, barometers, but also we'll be undertaking the borehole. as well. Social, very important. We've had a very engaged social campaign for years, to be honest. I mean, we've Jose Luis has been fantastic, and we've recently bolstered the social team up as well. Power, again, I've just talked about that in the presentation. Look at power supply, but really looking at that renewable contribution potentially from the Castilla and Leon grid, and the highest renewable contributor to the Spanish grid in the whole of Spain. So yeah, just in summary, those are the areas we'll be looking at. And then of course, on the back of all that is the process mine planning design to PFS level. And the great thing is that a lot of that PFS work, as we've talked about before, contributes to the report that you need to make for a mining license application. So completing the PFS, we've got most of the work if we want to go on and make a PFS application, mining license application fairly shortly afterwards, is already completed.
Okay, that sounds fair. There's been a number of posts on message boards regarding local support for the mine. Do you see any funding proposals coming from local banks or family offices?
I think regional, whether it's within the region, within Spain, within the EU, it's a fascinating time. Yes is the answer. I'm not saying we see proposals, but we're engaged in a number of initiatives. Obviously, the EU Next Generation Fund is a massive injection of cash into the whole of the EU. Yeah, no, we're actively engaged in looking at, I mean, we've already pulled down one grant through our innovation partnership with the University of Salamanca, and we'll be updating the market once we've submitted all the data for the next tranche of funds. But yes, that's something that's a realistic proposition, and there's probably about 10 to 15 different elements to that, which we're looking at pursuing and discussing at this present moment in time. But as ever, Zach, until anything's signed, it's nothing. So, but yeah, that's something we're very actively engaged in. Interesting times.
We'll keep that in mind. In your opinion, could Terrar or Europa Metals Iberica end up being a quasi-government or EU mine? If so, what is the impact, or what would be the impact on investors and potential suitors who have NDAs signed in both the long and short term?
I don't want to be cute, but the answer is no. I don't see it, the emergence of parastatal mining as being anything on my radar. I mean, lots of the historic mining, drilling at Terrar was parastatal, but that's something I don't really see. The second part of the question, I think commercially, in terms of what people are looking at the development of a mining industry and smelting across Europe, is being able to unlock private companies and give support to private companies, and just to let the free market run in its own particular EU way. I don't really see and that could be via subsidies or soft loans or grants or partial ownership, but on commercial terms with paybacks. I don't see anything on the parastatal way. The second part of the question is interesting, and we have a lot of discussions, and we have our own red lines, if you like, in terms of what we will and won't do, because we don't want to contaminate our project or our asset by doing something stupid, like giving away a partial amount of offtake for nothing in return, which then doesn't allow anybody else to do anything meaningful and poisons it for shareholders and for us. That's just one example. I'd say there's probably about 7 of those scenarios we talked through. So that is a very active conversation we had, but it's not really one we have around parastatal ownership, I'll have to say, Zach.
Okay, finally, you've had Adam Habib working with you, for you, over the last 6 months or so. What do you expect, for Europa and shareholders would be the sort of the fruit of his endeavours, let's say?
well, in case he's watching, what I'm expecting is to deliver a transformational moment for the company. Yeah, Adam's working very hard for us at the moment. Look, we're a small AIM company. Miles and I come from backgrounds across mining, finance, not just smaller cap. We've done lots of that, but investment management, advising major transactions and projects. And we don't just want to continue butting our heads against a brick wall just because we're the market cap that we are at the moment. We work with people like Adam and Conrad and pursue our own initiatives because we want to be able to deliver major value events from our project, from our company. So yeah, and we won't do anything which is detrimental to that or is a halfway house, which is just there to keep the lights on. It'll be completely pointless. So we want major events, major value moments for the project. And again, until we sign something, until we agree something, until all the due diligence is done on whatever it might be, it is what it is. But that is very clearly our focus corporately, as well as all the operational work we're doing.
And just finally, a question of my own. Obviously, young Adam might deliver a transformational event anytime soon, but at what time and sort of what way do you think that institutional investors might get onto the Europa shareholder register? And how would you angle or position the company to do that?
I think institutional investors, I think strategic investment groups are interesting in terms of the changing market for metals. So this whole need for look through and transparency across the supply chain, when suddenly people need an awful lot of ESG transparent metal supply, leaving aside whatever our market cap is, I think we're becoming increasingly more attractive on those points of view. As I've just said, regulation is the new friend of the mining sector in some respects. I would say getting our market cap up, doing something strategic, bringing in a strategic partner, whatever it is, further investment, etc. If we can just lift our market cap a little bit so we have the liquidity, we have the size. Frustratingly, we have a series of people saying, fantastic, yeah, it'll be great, we'll get on board and help you, but we just need to work very hard on just getting a bit bigger, doing a bit more work, I think, to get that liquidity in, as well as working at an asset level.
But it could be that just with the tide going sort of green mining, you get on people's radar who otherwise wouldn't have been looking at you.
That's it. I mean, it could just be the case of, all right, it's only X million market cap, but there's not many of them at this stage in the cycle, in PFS, basically coming up to a mining license application. It's in Spain. The concentrate looks like it's a great grade. It might just be easier to grab hold of it and do it, or do something with them. Probably better than I, Zach, it's those moments of fear and flux and transition where people start suddenly, those set in stone boundaries suddenly disappear. And I certainly think for the first time in what's been a very depressing, I would say, 13 odd years or 12 odd years, it's the first time I've seen the mining sector really buck up. I'm just watching what's happening in Australia. And also just watching it change as well. The mining sector is actually changing, which is curious because it doesn't really do that very often. So I think we can take advantage of that. I think we've got the right assets to do it as well. So, yeah.
Well, let's see when the FOMO kicks in properly. Laurence Reed, CEO at Europa Metals, thank you very much indeed.
Thanks for your time, Zach.